What's going on, everybody? KD for the Wealth Wells. I've been asked many times why I don't use lagging indicators to day trade. So I'm going to share with you right now the reasons, top 3 reasons you should not use lagging indicators to day trade. All right. The MACD, RSI, TTM squeeze, EMA, SMA, all that junk, take it off your screen. It doesn't work. Top 3 reasons not to use lagging indicators to day trade. Are you ready? All right, let's go. All right, as stated, top 3 reasons you should not use lagging indicators to day trade. Now, let me ask you something real quick, folks. Is it true that most traders fail in the market? You tell me, is it true that most traders fail? Doesn't matter what you're trading stocks, options, futures, crypto, forex, day trading, swing trading, doesn't matter, anything in the market. Is it true that most traders fail in the market? All right, now, let's do a quick research together. Let's just go ahead and do a quick Google search together to ask the question to Google so folks don't think I'm making this stuff up so you can understand. Now, I realize your favorite trader or the people you've been watching on YouTube, going to YouTube University and trying to piece together a bunch of systems. I realize that just about every person you see, if not everyone, they've got some kind of lagging indicator on their screen and they seem to be an expert. I am telling you, I don't use them. If you've watched any of my videos, you know I don't use any patterns. I don't pattern trade, and I don't use lagging indicators to trade. All right, we'll talk more about that in a minute. But let's find out what's going on. Why do most traders fail? Do most traders fail? First of all, we want to really get the numbers. All right, so let's do a quick Google search. All right, here we go. You can go online. I just typed this in online. Most traders. How many day traders fail in the market? All right, very first hit. 90% of day traders lose money in the first trading days in the market. All right, but let's drill down a little bit deeper. Let's see here. Here's a good one. What percentage of day traders fail? All right, let's click on that one there. All right, this is live here, so you can research this topic. You can do it yourself. And what's interesting is most people kind of know this in the back of their head, but they think that they're different. They think that, oh, I can figure it out. I'm different. I'll piece this thing together. All right, well, let's just figure it out. Let's look at it here. All right, what percentage of day traders fail? All right, here we are. Estimated that 95% of traders fail and ultimately lose their money. Interesting. All right. Well, how often do day traders fail? That's an interesting question. Let's drill down there. All right. Oh, okay. Here's a nice one. A study by the U.S. Securities and Exchange Commission, and this is talking about Forex, found that 70% of traders lose their money every quarter, and traders typically lose 100% of their money. Oh, my goodness, in the first year. That's crazy. Well, what percentage actually succeeds? That's a good question. Let's find out. The success rate of traders is estimated to be around 10%. So this means 90% of day traders fail and lose money in the market. Man, I didn't make any of this up. I don't make the numbers up. The reality is about 95%, folks. 95% of traders fail in the market. All right? So you should know the numbers before you get engaged. Now, here's a question to you. If 95% of traders are failing in the market and 95% of traders' screen looks like this, does your screen look like this? Are you trying to put the MACD or the moving average conversions on there, a stochastic up there? You got these buy, sell indicators and signals on your screen. Does your screen look like that? That's a lagging indicator. All of them, they're lagging indicators. You've got to wait until the candle session or period concludes before it can tell you what it thinks is going to happen next. That's lagging. Does your screen look like that? If it does, you fall into the 90 and 95% of day traders. Now, 95% of day traders, the screen looks like this. 95% of day traders are also failing. Let's do some math. If 95% is failing, 95% use lagging indicators, what makes you any different? You know what makes me different? You know what makes those in the Discord different? We don't use lagging indicators. I'm going to give you the top 3 reasons why we don't use them. All right. Now, many traders fail primarily because the system is flawed, right? It's because they're using lagging indicators to build a system. All right. Now, you may have seen some of my videos and you know I don't use them. I don't pattern trade. I don't trade based on supply and demand. I don't trade using EMAs, SMAs, MACD, RSI. None of that stuff that most traders use. Now, you don't have to take my word for it. You can do your own research. The first thing we need to understand, though, real quick, what's a lagging indicator? What's a lagging indicator? All right, as you can see there, a lagging indicator is an observable or measurable factor that changes sometime, here's the key word, after the economic, financial, business, or stock variable, whatever you're looking at, after the variable with which it is correlated changes. So after that variable, so lagging indicator would mean that on your screen here, after one of the candlesticks form, after this happens, then the lagging indicator would trail it. All right? Now, lagging indicators, typically technical lagging indicators, these are going to trail the price action over an underlying asset. And traders typically will use that to generate a transaction signal or to confirm the trend or strength of a move. And they live and die by these. I don't do it. Here's why. Top 3 reasons. The first reason I don't use lagging indicators is they oftentimes cause you to be late to a move. They cause you to be late to a move. They're 50% at best. Oftentimes you'll miss a move, or a person is just really trying to follow the lagging indicator, and the trade is ultimately just a simple breakout or breakdown. But a lot of times it gives you a poor entry. All right. The next reason, number 2, they create dependence. When you use lagging indicators, you oftentimes miss out on really what's happening in the market because you're focused on lagging indicators. They also foster further dependence because most people are stacking them. They're using lagging indicator after lagging indicator after lagging indicator, and before you know it, it's like, man, oh man, this is just getting too much. Now, I know you may not believe me. No problem. Let's do another quick little research here. Let me just bring this up on my computer here. Give me a second. All right. Let me bring up. Okay, cool. I'm going to do a quick research. The first article that came up is Investopedia. Here we go. I'm going to snap it on my screen right now. Investopedia. All right. We're going to look at this technical lagging indicators. All right. Let's look at the drawback here. This is an article you can research yourself. I'll read it. The drawback of using this method in asset trading is that a significant move may have already occurred, resulting in the trader entering a position late. I'm not making this stuff up. You're going to be late. 50% of the time, you're going to be late to the move. After that, it's going to create dependence. Well, what do I mean by creating dependence? All right, here's a screen. Here's a chart right here. This is what your chart's going to start with at first. But you know what traders do? They research on YouTube. They try to follow a bunch of traders and piece together a system. They went to YouTube University, or they jumped in 50 different Discords, and they're trying to overlay. And you know, if you're deep down inside, if you're really being honest with yourself, you know you're not consistent. You know it, right? But they try to combine it anyway, all right? And here's what they do. They come to the screen here, and they start layering on indicators. Let's see. Let's get some moving averages up there, 50, a 20, or 200. Maybe we'll put the Bollinger Bands up there. Or we'll put, maybe I'll do some other indicator strategy. We'll even leave a few up. We'll start stacking. Some traders stack. We'll do a 9. We'll do a 21. We'll do an 8. We'll do a 34. We'll do a 72. Blah blah blah. You know what? Let's also put RSI and MACD on the screen too. All right. Does your screen look like this in some way? And this isn't even all of them. Some traders have multiple indicators stacked at the bottom and at the top. And you cannot really focus on price action and the things that really move the market. And so these indicators here on your screen, the number 2 reason, number 1 after being late, the number 2 reason is they create a dependency. Because your eye has to go top to bottom, bottom to top, and say, all right, did the MACD cross? Yep. Did the RSI go hot? And you and I both know that the RSI can go hot, the MACD can cross, and it doesn't mean that the stock is getting ready to fire. It doesn't mean that, right? So the reality is they can create dependency, right? Slow you down. They impede your progress in reading the market. The number 3 reason is obvious: distraction. Distraction. The reality is you can only focus on so many things at one time. Really just one. Really just one. When you have a million different indicators on your screen, your brain can't process the data in enough time for you to make an accurate decision. And here's the problem. When you get caught in a bad trade, because you will, everyone takes a loss. Everyone gets caught in a bad trade. Sometimes what happens to traders is they get shell shocked. Has that ever happened to you? You get into a trade and the trade doesn't go the way you think, and before you know it, it's run away from you so aggressively, you're shocked or paralyzed. You know you should cut it, but you're hoping it comes back, and so you do nothing. Has that ever happened to you? Part of that is because you're using lagging indicators, all right? They don't help you come to the accurate conclusion most of the time. They're simply just clouding your view. Now, let's take them off our screen. To the contrary, let's just go ahead and start taking these things off of our screen. All right. Now, the reality is there's something that you can do that's much better than lagging indicators. Those are my top 3 reasons why I don't use them. But what do I use? No problem. No problem. You see how the screen looks a little cleaner now, right? Let's go to a fresh chart. All right. To the contrary, what I use, what we train in the Discord, now somewhere attached to this video, you can click the link down below or somewhere, and you can get the link to our Discord. All right. You can come inside of our Discord here, and you can learn to crush it the same way. Here's my stats and the stats of many in the Discord from last week. 37 trades last week, 37 wins, no losses. We traded SPY, SPX, futures, IWM, and some other components there. My bread and butter is SPY, ES, SPX, S&P. All right. I had a perfect week, and it's not uncommon for many traders in the Discord to string together successful days and successful weeks. It's not uncommon to do that. You can click the link down below. You can come into the Discord, and then you can read the testimonials. I would just start here. You don't have to take any of my word. You can just start here and read what folks who are in the Discord are saying about the training, the trading, the consistency, and the like. And then you could just jump into the SPY only options room and start crushing it with us every single day. All right. So that's what you do to understand how to trade without lagging indicators. Now, we use something called VVP. And this setup is a leading setup. We're using live market data to read the market. Now, don't get this confused with what traders call leading indicators. Technical traders call leading indicators things that predict. So that would be your oscillators. Any oscillator, the RSI, those kinds of, the stochastic, those are oscillators. And technical traders call them leading indicators, and they're not. Because what they're doing is they're just trying to predict. They're trying to predict future movement. And they can be wrong 50% of the time. Here and there, they're wrong, right? What we're talking about is live market data, understanding how to read the market. So let me give you a little glimpse here. You saw the previous, instead of your screen being cluttered and looking like this, right? Trying to find out when you can catch the move. Wouldn't it be simpler if your screen just simply looked like this? Wouldn't that be simpler? Maybe we'll even add, let's add volume somewhere on here. Wouldn't that be simple? If we just understood where the areas of interest were in the market, and you were taught how to properly chart the market, and you responded, then you could just simply enter your trades where you see the market telling you based on other indicators that aren't lagging, and you could just take it to your levels and be consistent. 6 to 10 trades a day, 2 to 4 trades a day, you're in and out. All right. Those are my top 3 reasons. That's it, folks. Those are the top 3 reasons why I don't use lagging indicators. Let's recap. Number 1, late. You're late to the move. 50% at best. It's not me making it up. You saw the research. Number 2, they create dependency. Now you've got to stack them and follow all of those indicators to figure out which one is firing. Number 3, they're a distraction. They're just going to distract you from what's really going on into the market. Now, if you want to understand what 3 indicators you need to effectively day trade, go and watch this video. The only 3 indicators you need to day trade consistently in the market. Forget and delete the rest. All right, folks, that's it. Do yourself a favor, click the link down below. Like this video. You can share it with others if you want to help folks to kind of not be a part of that 90 percentile that we just read about. If you don't want to be a part of this, share this with someone, like the video, come into the Discord, and you can learn how to crush it every single day. Remember this, if you show up, you'll go up. What do I mean by that? Well, show up to the market prepared, show up to the market with training, show up to the market with discipline, and watch your account go up. This is KDW for the Wealth Wells, signing out.